how do I evaluate companies that has like long-term hold potentials? Like I work at LayerZero, for example. I was an early investor back then. The way I look at it today is like, okay, whenever I'm doing like a venture style investment, I look at it three buckets broadly. It's like one is like who's the team, what have they done previously, and how are they best positioned to like target the market that they want to go for today. What's the product that they're building, whether it's like a huge enough TAM, whether it's like one winner take all solution market, or like whether there can be like a few dominant players. When we invest in seed, accepting the illiquidity for like years, we are happy to like, wait it out. I want to bet on this founder and I want to be able to like, get there on like ground zero, but I also fully accept that it's gonna go to the zero. I've had like 70% of my venture investments just like never do a TGE, and it's been years.
Yeah,
and it's, or even when they do the TGE, it's like straight zero. At this point, I write it off, but I also think like, okay, like there are some winners that have basically gone like all the way like 10, 100 X's, but then at the same time, it's like when we did that valuation, it wasn't like large checks. When you want to exit that position, you can also go to like market makers and like you can arrange for like a TWAP, a sell around them. Like you shouldn't be like full stack Hitlering it. I guess like that shouldn't be selling it immediately. But it's like, yeah, when I look at like, for example, like the Amazon IPO or like traditional tech stock investments,
right,
like all these companies were like much lower volumes, so like much lower revenues. But if you held that like Amazon IPO
for like
or like
20 years,
Google,
25 years.